We have a slight problem in the UK. The retirement age keeps going up. And yes, your self investment pension will probably get harder to get into because they're probably going to lock that as well. And at this rate, I might be 85 by the time I need to retire. So I want to do something about it, which has been in the pipeline since I was 23, give or take. So instead of waiting for some sort of permission to leave what I want to do in terms of make money and not get a state pension, you've got to take control. So I think today we're going to talk about that as an investment point of view, the snowball, why it matters you start as early as possible, and you get the best currency back, which is time. So if you like this sort of stuff, slap a like on the video and let me know, have you started investing yet? Now, I'm going to be really honest here. I'm kind of like an accidental content creator, I am. I started doing this a while ago. 2017, actually, in fact, when I started really doing it. 2016, I bought into Bitcoin and I did a couple of videos. It did all right. And yeah, Facebook kind of took off from that point and it went a bit berserk. And here I am, right? I've been doing this for a long time. This is a newer channel, as you know, for personal finance and more probably in tune with how I've developed as a person. Obviously, I've got 2 kids now. Things have changed from those degen days of cryptocurrency, even though I still hold Bitcoin. But in those days, I was in the Royal Air Force Police. I had a fantastic job, a really good job. I traveled the world. I was tactical police wing, as they say, and I was also a dog handler. So it was amazing. But I had an itch to scratch, and that itch was I can do my own thing. And with the military, you have a problem with time. Time's never your own. You've always got to ask for holidays. You've always on standby call. I had a job where I had to leave the country pretty bloody quickly if something went wrong. There was a few occasions that did happen. It was a pain in the ass. It ruined a lot of things. And then when I became a dog handler and we were doing 4 on, 2 off, instead of 4 on, 4 off, 12-hour shifts, it was brutal with that training day. So yeah, I did get lucky. I admit that. I bought Bitcoin early. It did very well. It gave me options when I was young, when I didn't have a load of outgoings or children. And this is what I've created. But the next step, realistically for me, is to stop doing this eventually, to get into a point where I've made it. I've done the thing that I want to do. And I don't want to be 65, 67, which is traditionally what it is now. My dad, for example, retired at 58. Very, very happy to see that. Really, really good to see. My mum's retired recently as well, and she's, only been working 1 day a week for a very long time. It's all about getting your time back. So we do need to talk about it. But the core message here as well, and don't get distorted, it isn't about the FIRE movement, which is utter shit, by the way, just saying. If you're into that, go for it, but no, not me. You got to live life as well, right? And this is not to do with like spending no money or nothing to do with I want to stop working at like the age of 40, because no, I will get bored and I'll probably do something very silly if that's the case. But we need to talk about what's on the screen. Investing. It's important to make money work for you. If your pay is going up and your tax is not going up, you've got a problem. If you are not investing and inflation is eating your savings, you've got a problem. If you are working until you're very late at life and you have to carry on working because you cannot afford to live because of the state pension and you don't have enough savings, you have a problem. So this is why we need to nip it in the bud. And as I say, it isn't about living on rice and beans. It's about maximizing what you have in life and understanding that there is a bridge to kind of cross, going from a spender to a saver, and then from a saver into an investor. That's the thing. And I think people get caught up in the distortion of that. But you need to also enjoy life. We do not know how long we are on this planet for. We don't. And I know that's quite morbid, but when we look at, say, life, this is my investment portfolio. This gives me some sort of satisfaction to know that I can afford to invest the amount I can invest because I've got stuff in place that has allowed me. What you're seeing is what you're seeing today. But no one, well, a couple of people may have in the past, in terms of my past journeys and stuff with cryptocurrency and stuff, may have seen the journey throughout. But realistically, we always compare to someone else. The reality is here, you've got to compare yourself to you. What are you better at versus the previous day? So if you can save a little bit and invest more, that'll be a good way to start. And I'll showcase a snowball compound effect of why consistent time behavior of automating money into the stock market, for example, not financial advice, of course, is much better than putting it in, say, a 2% cash ISA over the course of time. And if you know me, you know I'm an idiot. I've got a home gym, for example. I just randomly bought it. I've got a racing simulator over there, which I barely play on. I'll probably be selling it at some point at this rate. So it's not about, as I say, being boring. It's just about doing the right thing. I'll be honest. When I read the comments on my Facebook and Instagram, and when I talk about the fact that I'm a dividend investor, it really tickles my goat sometimes. But everyone's got a way with personal finances. And I'm going to showcase my personal portfolio here. And you've seen it before. This is on Snowball. There's a link below to this. You get a 10% off if you're interested. But let's talk about the obvious. If I'm to make £25,000 per year on the basis of my investment portfolio now in terms of results, it's not going to take long to get there. 10 years. 10 years, right? 10 years is not a long time, right? And that would bring me to the age of 44, give or take. What's scary about this is with the reinvestment of that, it will mean that I will be outperforming most people who are putting money in ISAs, which is where the snowball is going to get very aggressive. And I'll showcase what my journey is on this entire portfolio in a second. You'll see in a minute. And it's going to be like, well, okay, that makes sense. So even though there's going to be boring periods, and there's going to be red periods and good periods, whatever, the one thing that I always want is income. I always want cash flow because that is the thing that's going to make me retire early. Cash flow, right? If you can stop work, having savings is great, but there's a problem. You've got to use them. The best thing to have is savings and obviously cash flow. And most people's cash flow comes from one thing: your job, replacing time for money, right? You are given time to your employer. And as an employee, you have to do those 8 hours, those shitty jobs, and you get paid for it. I don't want that. I want something a bit different. And I think people are going to get into this line of thinking eventually. But when you look at my portfolio here, right, and ignore the goal section, by the way, this is just a weird kind of glitch, but look at this bit. Safe scenario basically is a lot less in terms of the overall growth here. So basically it takes it at 10%. This is what my portfolio is right now. That is based off not the stock price, that is based off the dividend that they pay as shareholders. Most good companies that are very profitable will increase it over time. That's kind of the inflation model that works with life and the stock market going up. But if we're talking about where this can be, by the age of 44 or 45, whatever, give or take, it could be between 29 and 20 grand per year as a payment. If I'm continually investing my money into that, my stock market ISA portfolio will really start to grow and keep growing. And then there'll be a point where I'll just stop and I can go, right, I want to stop putting it in my ISA and then I will put money into my SIP. Therefore, that can grow. And that can be unlocked later on in life as I'm even older and I've still got cash flow because I've already done the thing. The stocks and shares ISA is completely tax-free. That's the thing. Big, big thing. So I don't get penalized on that. I can withdraw and draw down on that if I want to and use it as a potential pension. Obviously, I still do have a pension, but ultimately I can work on that later on more aggressively as I got cash flow. And then I got best of both worlds. Even if I do draw out the lower than the tax rate, which whatever that could be in bloody 20 years' time, probably not a lot, not a lot higher, let's be honest. So it kind of makes sense having the both. And that's what you should have. Because nothing scares me more than the fact that this retirement age is going to keep on going up. And it is. Really, it is. And I think aging populations, it's going to get pretty horrible. And I think I'm in that crappy generation where we're going to see it. And I think by the time like you're 70 and you're going to get your state pension, come on, you've got to change it. You've got to change the script a little bit. So when we talk about my portfolio here, dividends received, right? 13, 283, 1,500. This is already scheduled, as you can see here, for the next 12 months, regardless of what I put in. If I put nothing else in, 2,600. That is the compound effect of me putting money in, reinvesting those dividends, and it's making me money. That is pretty good. I'm hoping, as I say, by 5 years, that's going to be quite life-changing anyways by being able to put an extra 10 grand in my portfolio as a reinvestment. Putting 20 grand in myself, that's going to be huge in terms of how I'm building this portfolio. And therefore, that retirement age will be pretty good. But I do know, and I will be honest, that this market could crumble at any point, obviously. But as I say, with dividend stocks, they tend to be a lot more reliable. That's good. We want that. We want reliability. They're good, solid. Yeah, they sometimes do cuts and stuff, but it does happen. Not all the time, though. But going back to the goal section, we're talking about compounding. We'll go back to the value section here. And you all know, if you've been following me, that I want to get 1 million by the time I'm 50. And when we talk about this in terms of current day, it probably will happen due to the factor of the inflation effect anyways. And 1 million quid realistically isn't enough to live on. If you've, say for example, I've got 1 million quid and I just stop at 50, I've got to get to basically, you know, retirement age, which could be 17 years from that point, or even higher, 20 years potentially, with 1 million quid. If you do the maths and divide that, that's not enough if you don't have cash flow, right? But you can see, ignore the goals section, obviously, say a portfolio of like 10%, or my returns now, let's be honest, let's go safe. That cash flow is going to be quite good. So even as I said before, with these sort of ranges, which we talked about just before with passive side, 20 to 25,000 roughly in and around this region, you're going to have a decent chunk of money in your pot from reinvesting and putting your own money in. So that's where it gets interesting, because at these points in it going down, your salary, in terms of what you can draw down on these, will get more aggressive. And I know I'm using my portfolio, £20,000 every single year, which is ridiculous, I know, but that's the price I'm willing to pay for that freedom. But I want to be honest with you. Retirement to me isn't about sitting on a beach. It isn't, no. It just means having time, having an option. The pressure disappearing that I have to work to do something. I could do a lot of things. I'm a bit of a workaholic anyway, if you know me. You'll see in a minute why. But the reality is here, the point of this video is just to kind of make you think you can change how you live. And I know it's quite brutally honest, and I said it before, we don't know how long we're on this planet for. And I say to people all the time, and I've said this for years, if you can make a bit more money and you can reduce one working day and have a bit more time with your family and have an extra day off, your quality of life will probably improve. Even if you do not miss that money that you are sacrificed potentially for that salary. As I say, time for money is a situation which we all have been brought up with. And it's all about removing the fear. Everyone in the UK does this. I want to overpay my mortgage. I want to get it gone. Yeah, peace of mind, great. But you do miss out potentially on the stock market there. But for me, I don't want more money. I just want more time. That's a this is why I don't do any sponsorship ads or anything like that. Every single content creator in the world of personal finance, crypto, or whatever are always throwing stuff down your necks. Like, oh, buy this, buy this, buy this, buy this, buy this yogurt or whatever. I don't know. They're getting paid for it. Great. But that eventually gets boring. It does, doesn't it? Let's be honest. So instead of doing sponsored ads, I'm going to build a website. And this website is going to be free for a while, at least. I am developing a product, and I have got a business call with a developer next week about APIs and data, right? Long story short, yes, I have a free course on here. Yes, there'll be other content coming which will be locked to members only. So make sure you subscribe and keep up to date. There will be a newsletter as well eventually. But I am developing a tool that makes it easy for research in terms of how I think about research and how I think, because I get questions all the time. How do you pick a stock? Well, I'll show you in terms of my way of doing it, but it is going to be very dividend led. Sorry. But the reality is, you go into, say, Yahoo Finance, and you're like, whoa, what on earth is all these numbers? I'm not an accountant, right? So long story short, it will develop it like a 7-year-old. It will give you little grades and stuff, what's good, what's bad, what the data means in terms of real life stock market picking. So yeah, it'll be within there at some point, but I need to find out how much, because it could cost me a fucking fortune. Therefore, then I'm never going to retire, am I? So yeah, if you are interested in this website, as I say, there's a lot of good content. There is some locked content. Obviously, there's a lot more locked content coming. Keep your eyes on it. There's a lot of things happening. And I'm going to try and get some other content creators to write on here as well. That could be fun. So I'm hoping that you're watching this video and you're thinking, I should probably really start doing stuff and get my finger up my ass. And you probably should be, yeah. But if you do want to see my portfolio here, this is the recent update of all the stuff that I have and why I do it. And it should hopefully, over time, resonate with you. But yeah, if you've not yet done so, slap a like on the video, comment if you've started investing, and subscribe if you want more of this sort of ramble.